You get additional liability coverage. You get you've now created what is called the corporate veil. And that's going to be for all of these: LLC, S Corp, C Corp. Everything from here on out, besides the sole prop, has a corporate veil, a way to shield you to a degree.
You are listening to the Mindful Business Security Show, brought to you by Fosivity, where we answer your questions and simplify information security for small businesses. Get the clarity you need to focus on the things that matter.
Hey there, thanks for tuning in. What do you get when an accidental CISO meets a blind hacker? Yeah, I never thought I'd say that either. But no, it's not the start of a joke. You're about to find out. I'll make this quick because we have a lot to cover in our show today. We're foregoing the normal call-in radio format for a series of special episodes about starting a business. I'm teaming up with my friend Joe, the blind hacker, a business owner, content creator, and cybersecurity consultant, to put this all together. We've been seeing an incredible amount of interest in our personal networks about how to start a cybersecurity consulting business, and we decided we wanted to help others by sharing what we've learned. Plot twist: starting a cybersecurity consulting business isn't any different from starting any other kind of business. So almost everything we talk about will be relevant to anyone that wants to start a service business, whether that's freelancing, consulting, or even power washing. I just picked something as an example, I don't know. Anyway, this is the first of what will probably be 5 special episodes. Each will stream live on Joe's Twitch channel, The Blind Hacker, and then be released in a minimally edited format here on the Mindful Business Security Show podcast feed a week or 2 later. Okay, I've talked enough. It's time to get the show dialed up. Let's go.
Do the cybersecurity risks to your business have you confused? Visit Fosivity.com/podcast. That's FOCIVITY.com/podcast and sign up to be a caller on a future episode.
Hello, hello, hello. This is Accidental CISO from the Mindful Business Security Show, guesting here with the Blind Hacker, and we are going to talk about starting a business. We are looking at this from the perspective of starting a cybersecurity consulting business, but everything we're going to talk about, for the most part, would apply to just about any business, or at least any sort of kind of consulting business, but I think any business in general. So this should actually be really good information for anybody out there who is wanting to start a business. I know I wanted to start my own business for 20 years before I finally did. And something like what we're going to talk about here today and over the next few sessions would have been really helpful to me. So hopefully this is going to be helpful to other folks as well.
Absolutely. So I'm Joe Brinkley, the Blind Hacker. I'm coming at this from I've also started a small business, specifically along the lines of I do side work for myself. I do side work for a couple of things, and I own a couple other small businesses that aren't related to cybersecurity at all. And again, the resources like this a few years back would have made some of the learning a little less challenging, but at least we have some like-minded capabilities here today to kind of go over this session 1 about, I've been calling it hacking LLC, or ultimately starting your cybersecurity freelance and or ultimately your business and your livelihood.
Yeah. Take back your life. So many people are burnt out and obviously kind of miserable working for somebody else, cyber tech in general. A lot of industries are like this, but cyber, from my perspective and what I see people talking about is one that there's just an awful lot of burnout. It's really, really prevalent. And, being able to learn how to do things, help you take back your life and gain some of that freedom back, I think is going to be huge.
I agree. I know we originally started this by, I saw you post something on Twitter, X, and it said it was about the ProAct. It was Mike Rowe talking about the ProAct. And I had also had concerns and saw that And now I get it from a universality, big global U.S. kind of experience. Like what that would mean would be that they're trying to encourage employers to hire. This is mostly for the Uber or Lyft kind of folks. Ultimately, they're independent contractors who are probably not being paid fairly. But the issue is as with all laws, this can have unintended consequences to folks who might be 1099 right now and trying to just enjoy the independent contractor life. Would mean that if they work a certain number of hours as a 1099 employee, that they would have to be hired on full time. Again, losing some of that freedom, maintaining burnout. Whereas before you could control your hours, you could control your when do you work, how do you work, with statements of work and things. But when you're an employee, suddenly these expectations are set to your standard, or, the company's standard, no longer your standard.
Yeah, exactly. And then talk about the PRO Act. PRO, I believe it's a people's right to organize. So ultimately, it's a bill to support unionization, but there's a bunch of stuff in it, and a lot of it, like you mentioned, to help with classifications of employee versus contractor, because there are many organizations out there that abuse and misclassify on purpose workers as contractors instead of employees. And uh, some of the stuff in this, and obviously this is, I suppose we should also mention, this is not something that has passed yet. This is something that has been hanging around for a while. It's still going through the Senate and the House here in the U.S. If it's passed, will it be in its current form or something different? We're not sure exactly what it will look like, if and when it passes. But, just the fact that this is something coming up, it made me start to take notice, just because I want to make sure that I'm doing what I need to do to not run the risk of having myself classified as an employee of another organization. So either a client, or I do a lot of channel partner based marketing. So a
Yeah.
channel partner potentially. I work for do work supporting other vCISOs, IT managed service providers, MSSPs, those types of organizations, and definitely don't want to run the risk of having somebody come back along and say, nope, sorry, you got to be an employee here. Uh, and there's things that can be done there too, how you set up your company and your organization, um, and to be able to show that you're investing in yourself and your company, and the tools that you're using and providing for yourself, as opposed to having that other organization that's hired you on a part-time basis or something, providing. So computers and things like that may play into this. There's a lot of details in here that may affect how you may be classified, but it is my understanding, as I've been looking through this, like if you are starting a business, as we're going to talk about today, and how to do this stuff, and you do run your own business, and it is operated as a business, not just an independent person as a contractor working for a single company, but you're doing work for multiple clients. You've got your business insurance set up, your business bank accounts set up, you're doing sales, you're doing marketing, you're doing all these things that a business itself normally would do. Generally, then it is my understanding, at least in its current form, that will help set you in a position where you would not potentially be reclassified against your will. There are many people out there that will be reclassified if this goes through, and should be reclassified because it's being abused as well. So, trying to stay out of the political side of this and just look at it objectively, and like what we can do for folks from our perspective who have been employees of another company and don't want to be that again. I want to be business owners and self-employed, going forward.
And I think that goes a lot of towards our first kind of bullet point is strategy and pre-work, and some of this we're going to lead down a path today of how to get from the idea that I want to be a business owner, or that I am a small business owner, or that I've just formed an LLC. Now what? All the way to kind of just some of the ideas that we would have behind like why, if you are in one of these areas that you could potentially be reclassified. Again, if you want to have more ownership and more freedom, it actually benefits you not just to be a 1099, because 1099, depending on what state you're in, depending on region, accountability, yeah, you can still file a Schedule C, but actually starting a sole prop LLC, if you plan on just being by yourself, can help you now with additional taxes. You get more write-offs. You get more percentage of your house. You can write off if you're working from home or if you're buying a co-op space, things like that. So when you really start to sit down, and the strategy here again is to maintain your freedom if there is potential for you to be reclassified, I think, as an employee, and it's your goal not to be reclassified. Again, if you want to be, absolutely, hopefully this goes through, you get your rights, your options, you get the full-time employment benefits. But if you're also like, but I also still only want, instead of being forced to work 9 to 5, I really like my, 3 p.m. to 10 p or to 11 p.m. run through. Like, and, again, if that's the position you've positioned yourself in as a sole proprietor, or small business owner, again, or as an LLC, as a partner, and the companies that have hired you are okay with those times, then it's going to work out for you.
If we jump into what folks should be thinking about early on, and there's a lot to cover. We're going to do multiple sessions over this because there's just so much ground to cover. But I think the first thing, like you mentioned, is that pre-work, that strategy. Why am I doing this? Like if you're thinking about starting a business, stepping back and thinking about what is my goal in starting my business. For me personally, as I started mine, I sat down and actually took some time to write in a notebook offline, by hand with a pencil. What is, the sort of pre-work and planning, because I needed that. Like, I was so burnt out, and I needed to start from the very beginning. And for me, my my two big things of, I was thinking about, like, what would I do even if I wasn't being paid to do it? What would I do? And my answer to that, I came up with, like, I would help people. So I started thinking, like, okay, how can I best help people with my knowledge and my background and stuff? And that's how I landed back on consulting. Because as I was thinking about starting my business, I wasn't sure exactly what direction I wanted to go with that. And so helping people was a big thing. And my goals with it, really, I joke that, my goal really was, I just didn't want to lose the house. That's kind of tongue in cheek, but that was part of it. And we'll jump to standard living here in a second. But my goals were to control what I worked on, when I worked, and the pace that I worked at, because those were the three things that over the prior, 10 years of my career that led, to the culmination of the burnout that I was suffering from, that had me walk away from a CISO role with nothing lined up because my health was worth more to me than money at that point. And I said, I don't know what's going to happen, but I can't keep doing this. And, so after, as the dust was settling or whatever, like, those are the three things I came up with. For me, those were the driving things for me. And I sort of grounded everything I did after that in those three things, and looking at how do I build a way to help people while still maintaining those three core things.
Absolutely. I think my initial foray for starting the business was again mostly side work oriented goals. I had my 9 to 5. I had done some side work for folks as a 1099, but then I also realized, again, there's benefits to going and at least just filing a couple pieces of paper and paying some money per year. And my first goal was initially to pay for my wedding. It was 2010. I had been doing a lot of side work before that, but then I started this business in 2010 with kind of the specific goal of paying for my own wedding. I didn't borrow any money to buy my first house. I didn't borrow any money for anything else. And I didn't want to borrow any money for my wedding. And so it's kind of like a, it's a personal point to me that if you did those things, that's fine. But to me, my personal goal was to prove part of it, my family wrong, because I had family who was like, oh, well, if something happens, we just can't help you. I'm like, I've never asked certain family members for help. So I don't know why those comments need said. So when I said I'd like to pay for my own wedding and I started the business and I went out and got the side work and, was it the best work? I was doing a lot of things I probably shouldn't have been doing. Just, taking on any jobs, anything I could get my hands on. And it worked out, but there were moments that I really felt like giving up. And is this right for me? Am I CEO quality? And I had to answer those questions for myself.
And that's a good point. Like I don't recommend folks do what I did necessarily. Yeah, taking back control of your life is great, but like I completely YOLO'd it. Like I said, I had nothing else lined up, and I'm like, I'm just going to make this work. And I had faith that I would figure out a way. I knew that I had some, a little bit of money saved up and that kind of stuff, that I had a little bit of runway, but it was definitely scary. And so I had to come back and think of like, what do I really need to make? How much do I need to cover? What's that's going to take? As I was getting things set up, healthcare was something that had always kept
Oh yeah.
me from making the leap for a long, long time. And so that was one of the things that I had to figure out. And so the marketplace plans, as I started looking into it, were, they were high deductible and stuff. And it sort of made me uneasy at first until I started really doing the analysis. And I sat down with my wife and we looked at, the prior couple years and thought through, what we had paid for healthcare, how many times we went to the doctor, how much we were spending on prescriptions each month, and this, that, and the other, just to get a feel for like, what is our real healthcare spend? And
Yeah.
what we ended up finding was that because we're relatively healthy, it compared to the cost of what that my employers had been paying for health insurance, or what I had been paying, it, combined with my healthcare or my insurance, that those premiums were like almost 20 grand a year.
Yeah. Yeah.
Just to have the insurance. And I realized like, gosh, we don't spend anywhere near that. And that's when I started looking at the deductibles and the cheaper insurance and starting the business. I qualified for the full subsidy in that first year through
Yeah.
the Affordable Care Act, the marketplace plans. So our health insurance ended up being free, and we paid out of pocket. But what I found was like a pediatrician visit was $80 to $100. Family doctor visit for my wife and I was like $120. It
Yeah.
was even if they had to do blood work, it wasn't super expensive. And when you go to the pharmacy, either like things like GoodRx or the pharmacy's own in-house discount programs actually ended up being cheaper than going through the discount that insurance gave
Yeah. Yep.
for having the marketplace plan. So the things like my ADHD meds, or my wife or my son's anxiety meds, they weren't really all that expensive with the free marketplace insurance and the discount that we got. And what I realized was like, okay, the marketplace plan is a stop. It's a limiter. If something terrible happens and one of us ends up in the hospital or something, like it's going to cap our out of pocket at that $8,000 or $10,000 or whatever the out of pocket max was. But the chances of that happening for us are relatively. This basically was a risk management decision I had to
Right.
make.
Right.
And I was like, it doesn't make sense for me to pay more for a silver or a gold level plan, or to go buy direct from another provider for an individual plan that paid more to try and replicate my employer provided coverage if it wasn't going to cost me that much out of pocket for, $100 here, $100 there. The prescriptions were about the same either way. with the in-house stuff. We ended up having some x-rays done. My daughter fell when we were at a friend's house picking pumpkins and stuff last Halloween. We took her to urgent care and had some x-rays. Like, she didn't break anything, but like, I was expecting it to be really expensive. It ended up being like $300-400 for the urgent care, plus the x-rays, plus the wrist brace that they gave her and that kind of stuff. And I was prepared for it to be a lot worse. And even stuff like that, when we added up everything that we spent over the course of the year for healthcare, it ended up being the right decision to not try to replicate that Cadillac coverage that our employer had had
Right.
when it really wasn't needed. Now, again, we're relatively healthy, so we're not dealing with any sort of chronic health issues or anything like that with expensive ongoing medication. So obviously everybody's going to be different. And I recognize I'm very lucky that we were in that situation.
Yeah, I think that comes to the conversation you and I had where, what is the marketplace? What is those things? Can you live comfortably on a little, saving a little bit of money now, but knowing in the future you're going to do better? So maybe you take health seriously the year before you decide to give it this jump. You go to all the doctors with the Cadillac insurance, you hit everybody up. And then when you jump, you go ahead and get that cheaper premium and find the actual, again, finding that actual out of cost pocket. Again, this is going to kind of start you down that path of kind of budgeting for your business, which you've got to do anyway. And then I think it works out there. And speaking of that, as we talked about too, we talked about one of the interesting things is from your perspective, you YOLO'd it. You had some money, you YOLO'd it. Me, I augment my salary, and I know some other folks. Again, if you're a full-time 1099 or doing things like that, what we or you're thinking about doing it, and you want to get that freedom of work when you want to work. We talked about don't try to replace your salary. Figure out what you can live off of, and either you could take that low, figure out those numbers. That's what's really important. Again, as you said, right now, my wife's and my insurance, just because it wasn't great through my company 2 years ago, I started paying for it. It's $1,200 a month for two of us. Now, relatively speaking, we're okay healthy, but when stuff goes wrong with us, it's catastrophic usually. Like my whole sleep apnea thing at the end of last year, I had staph infection for 3 months. It was brutal. If we had a cheaper insurance bill, wouldn't have been great. But because I do pay for that higher tier silver, lower tier gold, that area, it worked out for us. And so, but being able to do that, now I would know that a minimum I need to survive would be mortgage. So we'll call it $2,500 a month. Insurance, $1,200 a month. And then, ancillary other bills would be power, food, everything else, from my side of the income, we'll throw in another about $1,500 to $2,000 a month. So, well, what do I have to make a month? We'll call it $6,000 a month. Can I live off that? Because that's, certainly not what I make from my salary.
Yeah. And I came up actually with the same number. We had been careful. We didn't have a ton of debt, other than the mortgage payment. I got a couple of toys, our camper trailer that we've got, and we've got an older Camaro convertible that we bought from my uncle several years ago, but neither of them were expensive. They were used when we bought them. And so those payments were relatively low, but like I was driving a 20-year-old pickup truck that had been paid off since like 2011. And my wife's car had been paid off since like 2012 or something like that, I think. And we still own those cars. Like, I'm still driving them because they're working for us. Like, there's no reason to get rid of them. But so we were lucky that we didn't have a lot of things that we had to unravel first. I know when my grandparents started a business when my dad was a kid, they had to sell their house, move into an apartment, and they sold a bunch, and they completely reimagined their entire life before they bought the hardware store that they owned then for the next 30 years or whatever. So I was lucky I didn't have to do that, but I came to that same number. I needed basically about $6,000 a month to cover expenses and
It's
that
about
kind of stuff.
$72,000 a year.
Yeah.
It's not unreasonable.
I can make this work. So that was a big thing. But that doesn't include savings. And that is something that I have been doing for quite a while and gotten accustomed to. And the thought of not saving was really making me uncomfortable. And I sat down and I started thinking about, why am I saving? What am I doing with that save? Well, I'm investing for the future. And
Mm-hmm.
okay, well, there's different ways you can invest. You can invest money in other people's businesses, but I don't want to work for other people's businesses. And right now I want to invest in myself. And I came to the conclusion that I had to give myself permission to stop investing and, traditional saving while I was starting my business. Now, this is temporary for, year and a half, 2 years, while I'm getting the business established, because that reduces that part of what I have to make. Because part of where my salary went before, when I was looking at replacing my salary initially, was replacing the savings. And I realized, God, I don't need to do that right now because I'm investing that sweat equity into myself. So giving myself that permission too was something I had to get by. And again, for anybody listening to this, like, this is temporary, because we're going to get to, as we're talking in future episodes, as your business takes off, owning your business actually is going to give you more investment options to save even more aggressively than you could when you were working for somebody else. So that we'll get to here,
Absolutely. Yeah.
and dig into in another session.
I think I absolutely love the idea. Whether you're seasoned pen tester or starting out and no one will hire you, again, investing in yourself. I know that some of our viewers have talked about, like, oh, well, I went here and it cost us a lot. Well, hopefully you networked there, and you might not. And again, networking, we'll talk about that, but you're not going to see something right away. If you're expecting instant results after starting your business too, tough luck, Buttercup, because there's no such thing as instant results. As we talked about, cash on hand, credit lines, we could get on all that, but really you got to make sure you are comfortable with the money you can make. Again, rather than replacing or even leaving your current job, if you have a great relationship with the folks you work with, you can always try to say, hey, I want to be my own boss. Still want to work for you guys. Still want to get everything done that I do daily, but I want to be my own boss. That right there is that initial opportunity to, how do I get started? Well, that right there is step one. Go out, form the LLC, then go back to your company and say, hey, I'm not leaving right now. In the future, things may happen, but also I want a little bit more freedom. And if you have a good relationship, you should be, fine. But I know we talked about it somewhere, but I want to kind of skip there just to kind of talk. So if you got that relationship, that's one way to get your first client, is at your current job or at people you already know, working with them. Again, networking is massive. We have a whole section for networking. So certainly making sure cash on hand, again, savings. How do you want to start this section? Because, credit lines, I could go on forever about credit lines because I have credit for all of my condos, all the buildings I own, things like that. But business credit is a little different than some of that.
Yep. So one thing that I went through as I was starting this is I was looking at what money do I have available and where is it? And I had some cash in savings, that I could just move into my checking and pay bills with. I had a few months worth of that, that emergency fund that everybody tells you should have.
6 months.
I decided, mine wasn't 6 months in cash because I wanted it invested elsewhere. But,
Right.
I had 3 months in cash, and then I had more of it in after-tax savings. So this is not in my 401k. This is just pure like stocks and things that I had vested over years. Some of it had been incentives from prior employers. Some of it's just been stuff that I had bought, over the years. And so that was sitting there and I had that. But I was gnashing my teeth because at the same time, I didn't want to sell it. And I didn't want to create that taxable event because when I had some of these, the stock, I've been holding on for 10 years.
Oh, wow.
And,
Yeah.
some of it had gone up significantly in that 10 years. So selling those shares was going to create a taxable event. And I really didn't want to sell them either and then have to buy them back later. Obviously you don't know if the market's going to go up or down.
Right, right. You sold low and then you got to buy back in at high. Oh, that'd be awful.
Looking back at the time, I should have just sold because that was at a peak. But
Fair.
you don't know that then. But what I realized was with certain types of brokerage accounts and that kind of stuff, you can borrow against it. You can get a credit line and use
Margin
that
and
as
leverage.
collateral.
Yep. Yep.
So that stock that I had just sitting there, I was able to work with the E-Trade to set up a credit line against that. And then, so all of a sudden now I have my 3 months of cash, plus I've got a credit line equivalent, and the total equivalent now ended up being a year's worth of cash runway based on that number we were just talking about, based on the monthly expenses and things that we were going to
Yeah.
need. So as I'm looking at starting things, I'm like, okay, I have a year to make this happen before I either run out of money and have to get a job or, whatever, whatever else. So that was a big thing. You can also borrow against 401ks. What sucks is you can't borrow against an IRA. And I had in the past rolled over some 401ks and stuff from prior employers into a traditional IRA. I couldn't borrow against that.
Right.
So I left
Yeah.
that sitting and didn't do anything with that. I only did the credit line against the after tax. But it's an option that folks should be aware of, that you don't necessarily have to sell your after tax and stuff and stock or investments or whatever and take that hit on the taxes. You don't have to cash out part of your 401k retirement plan and take the penalties and take the tax hit on that either. Like there are ways you can do that. This is different though than taking out personal loans and credit cards, because this is secured. Home equity line is another thing. I didn't have a home equity line set up when I was starting this. I wish I had set that. If I had been thinking ahead, I would have also done a home equity line. I did not do that before I was no longer a W-2 employee for somebody. And as soon as I was self-employed, it gets a whole lot harder with the banks to get approved for that kind of stuff. So, that's something that also you can look at if you're a homeowner and you have that equity, and those can help with your runway. But personal loans and credit cards, you got to be real careful because the interest rates on them get so expensive that it just isn't worth it. Like, you got to find a different way to do that. You can't. I don't want to say you can't, but it is generally not wise to finance your business and your entire lifestyle while you're starting that business on credit cards that could be at 29 or 30% interest.
It certainly can get rough. We have a title here: "Beware there be drag." It's absolutely the idea of using your personal credit and things like that, unless you are quite affluent. I don't recommend it. Certainly, if you have friends, family, work out deals with them, get loans from grandma, again, a home equity line of credit, build the company, start the company. Usually after 1 year of running, you can approach some financial companies to help you boost up. If you, within 6 months, if you're doing, at least a few thousand a month, you can reach out and go to Chase Inc. And get the Inc. Business cards. They're, again, still high interest, but now it's in your business name. So if it goes belly up, there's still some PG, personal guarantee, you might have to sign for. But again, you want to make sure that you can recover from this. If it doesn't work out, just like you created a plan to get in, though I never vote for planning to fail, you want to have a plan to get out.
Obviously we are cybersecurity folks. We're not financial planners, financial
I put
advisors.
that in chat too.
We are, we're just talking about, like, these are options that we realized we had as we were going through this and what we did to make this work, and just ideas that I was glad that I came up with these ideas and that other people may not think about. And so, it's good to know what your options are, and that, your only options aren't just to purely cash out and sell any investments that you have to get the cash. Like there are some other options and things to be aware of uh, with that. So uh, there are obviously drawbacks with starting a business too. One of the terms, there have been a few terms that we've thrown around here, 1099 being one of them, sole prop, LLC. So we're going to talk about some of that stuff here now and over the next several minutes too. So um, as an employee, you're a W-2 employee. W-2 is the tax form that you get at the end of the year versus a 1099, which is the tax form that you get if you're an independent contractor. And then the difference between those is the W-2 as an employee is going to have taxes withheld out of them because the employer is going to hold those taxes out. They're going to submit them on your behalf. They're also going to pay their half of your federal taxes.
FICA, federal income tax.
And a lot of people don't realize that when you have your taxes withheld from your payroll, there's amounts of money that's also that your employer is paying on your behalf, their portion that's not on your pay stub that they're also paying. So all of your federal income tax and Medicare and Social Security and that sort of thing, they're paying that same amount on their side as well. And so when you're a 1099, no taxes are withheld, you're self-employed, you're going to pay both halves. And so that's what people talk about when they talk about self-employment taxes, or that self-employment penalty is you're now having to pay the employer half and your half. So when you are a 1099 contractor employee, now you've got to handle your taxes and you got to pay both halves of that. And I should say too, when you're a business, when you have a one business working with another, business to business still will send 1099s back and forth as well. So at big companies, little companies, it doesn't matter. If the spend is above $600, to a vendor, technically if you buy pay more than $600 to a vendor, technically you are supposed to send that vendor a 1099 form and report that to the IRS that you paid that money to that vendor. Doesn't matter how big that company is. If you
paid a pressure washing company to pressure wash your guess what? Still got to send them a form.
Yeah. So that's when we talk about 1099, that's what we're talking about, is that business to business or that self-employed income reporting versus the employee income on the W-2 where it's taxes are withheld. Let's see. And then, as I mentioned, the other real big drawback to this, I talked to my bank to try to do a home equity line after I had started the company, and I had to pull together a bunch of documentation, and unfortunately, it didn't have the history, earnings history. Once I had started my own company, and the bank came back and said, come back when you got 2 years worth of P&L reports and paperwork for us of your company. So I had to hold that off. So, and if I were going to, luckily I already own my home, and I'm not looking to buy right now. But if I was looking to buy right now, I'd have the same trouble getting a mortgage. I did find it very interesting, though. Last year around this time, I bought a new pickup truck because we're taking some bigger RV trips, and I wanted a bigger truck that was, heavier duty, rated for towing long distances, was going to be under warranty, that kind of stuff. And normally I buy used vehicles. I bought new. And when I bought this truck, I didn't have any trouble with that. They took at face value what I said I earned, monthly income and that kind of stuff. So some types of purchases and loans are easy and not a problem, and others require a lot more documentation and can be far more difficult when you are self-employed, especially newly self-employed.
Absolutely. It's that's why I said, That's to me. That's why I would start a business. If you're thinking about in a year from now going out and starting your business before you even start that path, even if it's on your mind, go start the business, because the sooner you can get the business on paper, not even necessarily money coming in the door. Money would be great if you can find a couple things to do that are, again, low risk jobs, side work. If you can, even if, the minimum number you're looking at is if you can get about $1,000 a month coming in, even on your side work, you can get yourself some quality financing, which can set you up to, again, run the business longer. The longer you can run the business, the more opportunities you get to make business. The longer you get to make business, the more money you can make. It starts to snowball. And there's some good effects here, where folks are talking about, like, it's all risk. It is risk. Every bit of this is risk. Am I saying go out and leverage your home to get your business started? No. But if it's going to be able to, if you have 6 months to a year in savings and you have the home equity line of credit, and that can buy you trying for 4 years, like, go for it. That's a lot of time to potentially make that money back. Now, if you are already leveraged to the gills and you're starting your business and things are tough, again, alternative financing if you don't have it, or really, once again, pulling that hustle work, go out mowing lawns. I literally know a guy who started a business not to mow lawns. He mowed lawns, got enough money to fund and start the business, gave himself an extra 6 months of runway, stopped his day job, and then went and did all this other stuff. It wasn't just mowing lawns; it was cleaning boats, it's just cleaning the bottom of the holes and all that stuff, painting them. He's just doing everything he can that paid extra money on the weekends to do that. Like, even if it wasn't in his skill set, he did it. Why? Because it bought him more and more runway. The more runway he had, the more confident he was. The more confident he was, the better off he's going to get out there. And if you're that motivated to do that just to start the business, imagine how hard you're going to fight to keep it.
Yeah. And as you're getting started, the biggest thing that you can do is just to start. I mean, like Joe's saying, just start. Do something. You don't have to have an LLC to start.
Correct. Yeah,
you can be, as Joe said earlier, another term that we were talking about, sole proprietor. A sole proprietor is a business owner, or a business that is being run under your personal name, under your personal tax ID, your social security number, and you run this business. You still got to keep track of what you spend and what you make with the business, and keep your sort of books together. It can be done in Excel. You don't need fancy tools for this. But as a sole proprietor, it's going to go on your personal income tax return. It's going to go on a page that's the Schedule C form. And we'll talk about that, as one of the key things we get into this. The Schedule C is one of the pages when you file your federal taxes, that shows the business information and business income and business expenses, and breaks out the expenses and that kind of stuff. And it ultimately shows the business profit, which at the end of the day, when it's on your personal social security number, that profit is your income. So you end up paying taxes on what you have. Even as a sole proprietor running this under your legal personal name, you can file, and each state's a little bit different, but you can file with the state for a fictitious name or a trade name. Depending on where you live, they may call them different things, but the fictitious name or a trade name basically gives you a registration with the state that that name exists, but is tied to you. And you can take that paper to the bank and you can open a business bank account in the business's name with your social security number and that kind of stuff, but in the business's name now, because you have that fictitious name registered and it now exists in the eyes of the government.
Correct. Yep.
So you can do this without having to form an LLC. And so, you can prove out that your business could work before going to the trouble of creating an actual business entity separate from yourself for this. So, that's another piece of the puzzle here, that just starting, you don't have to go all the way to an LLC just to start. Now, there's some
Correct.
risks here
Right.
that we'll talk about in a minute with that, but
I would say that's one of the biggest risks people ask us about too.
yeah.
Yeah, again, if you want to prove your business works, again, the sole prop, putting your name out there, some people still may poo-poo on you, but again, guess what? You don't have to work with or for those people. You can move right along.
And then, if things are working, you can register an LLC. This is something you could do yourself online. It's not terribly expensive. I had my lawyer do it for me. It was like $300 to have the lawyer do it. And I basically was like, I have enough other stuff that I need to do to get my business set up at that point. So I went ahead and decided I was going to pay the lawyer the $300 to go register that for me while I continued working on other things. I had created a name for my business also that was original and what, like a new word that hadn't existed before. So I was able to trademark it. So I also had the lawyer work on that. That actually was surprisingly affordable as well. Coming up, doing the trademark, I want to say was like $1,200 or $1,500.
Yeah.
The trademark office is incredibly slow. It took well over a year from beginning to end of that
Over a
process.
year. Yeah.
But even though it took that long to do, the lawyer's fees cumulatively over that time still were not that expensive for that. So that's just the thing to keep in mind. But the LLC that you can create, when you create the LLC, like the first thing you're going to want to do as soon as you've created the LLC is go to the IRS's website and get an EIN, a tax ID number.
Absolutely.
And so now your LLC is a separate entity from you, and it has its own tax ID number. You don't have to do that. You can do this with your own social security
number. The reason
number.
You want to, you absolutely can, but I would suggest and I learned this the hard way. The reason you would want to is that EIN, again, for funding purposes, for many other things, and not just that, but once we start talking about one of the biggest things, the reason LLC S corp is, again, now you get additional Schedule C kind of capabilities. You get additional liability coverage. You get additional. You've now created what is called the corporate veil, and that's going to be for all of these LLC, S corp, C corp. Everything from here on out, besides the sole prop, has a corporate veil, a way to shield you to a degree.
Yeah.
And then I'll stop there. We can keep going.
And that's ultimately the big benefit of the LLC is now your personal assets. If something happens and as your business, a mistake happens from a liability standpoint where your business gets sued, somebody's, pissed off and not happy, and you try to resolve it and they still sue you. If you've done things right, your personal assets, your home, your car, whatever, like it won't come all the way back to you personally because they will only be able to sue the business. And there was a thread on Reddit with this corporate veil. Somebody posted a thread in one of the small business subs, actually today or yesterday, and ask a question about, what are the tricks that lawyers use to pierce the corporate veil, to basically get through that and still go after your personal assets. And, I'm not a lawyer. This is not legal advice. But my response was, lawyers don't use tricks to pierce the corporate veil. They leverage the mistakes that you made that you can't fix now. It's too late to fix it, to pierce the corporate veil. You've pierced it yourself, not the lawyer in that case. And the biggest thing that you do to do that is to commingle assets, commingle finances, personal and business. So when you set up your LLC, having that EIN, creating dedicated business bank accounts for the business under that EIN, it's basically your business's social security number now.
Yep.
You can now keep everything completely separate. Every business transaction has to go through the business account or through a business credit card or something like that. But like, you don't commingle stuff. And where people screw this up is custody battles, child support, that kind of stuff. I have a friend who got behind on child support, and every time he would get paid, they pull the money right out of his personal bank accounts. And he was trying to start his own business, and like, he couldn't, like, he would get paid by clients, but the money would get pulled out faster than he can even go put gas in his car to be able to actually go do the thing that his business did, because it required mobility, driving around. Like, he couldn't even do that. So, he realized, like, oh, I need to create this business entity that is separate from myself with its own EIN to now be the business. And so that has allowed him to finally be able to get his feet under him, pay himself, get caught up on all the child support and that kind of stuff, because he was able to keep the money in the business long enough to pay the business expenses to keep the business going and not have it fail. But where people mess this up is they start trying to hide money in here. This is a really good, a really, really common example. If you're trying to hide money and do personal stuff out of your business bank account and those types of things to avoid stuff like that, that's where the lawyers are going to get you, because now you're commingling personal and business, like funds and expenses and things like that. Keep your books clean and separate is the biggest thing there.
Like, what tricks do lawyers pull? Exactly. They don't. They wait for you to make a mistake, or they allow you to make the mistakes. It's actually not too hard. Again, as long as you don't put personal checks in that account, or you don't put business checks in your account and then transfer it back and forth. Always cash the checks to the right account. Yep. It might feel, did you pay for lunch with your business card? That's okay. It's an expense, but you don't get to write off that kind of expense, right? Now, if a business lunch is different than accidentally pulling out your business card and paying for lunch. That's not piercing the corporate veil. But what you got to make sure is that you're not doing that every day. Now, if you're using the corp card to pay for gas, make sure that the bulk of that activity can be traced to traveling to and from a client site. That's not, some lawyers might try to get some folks on technicalities there. But again, if your goal is to limit your liability, getting the EIN, registering the name, getting the EIN, and then getting a separate account and literally leaving it as separate as you possibly can. That's your best bet. That was the massive question that both AC and I got. How do I limit my liability? Well, yes, what you do want to do is make money. What you don't want to do is mess up and then for some reason have a very vindictive or overly aggressive client sue the pants off you. Well, if your corporate account only has, $1,000 and they sue you for $1 million and you don't have insurance, well, guess what? They can gladly take ownership of that $1,000. But if they can try to prove, some lawyer proves that you one time, and they get records and they're going to ask for records. And of course you've got to compulsory comply with some of these, if you've never pierced the veil, you should be fine. That's how you limit liability.
Yeah. And it's not foolproof, but it's way better. It's way better than doing it as a sole proprietor. And from a cybersecurity consulting standpoint, different businesses are going to have different risk profiles. We talk about that in cyber when we're building our security programs, but risk management from a business perspective covers a lot more than just cyber risk, obviously. And this is one of those risk management decisions you have to make is, do I want to take the risk of being just a sole proprietor and doing this in my own personal name, or do I want the extra protections that an LLC can offer me and just take those few extra steps, pay that little extra money? Some states have recurring fees every year, others don't. So that may also play into your decision. Like as far as I know, I think California, for instance, I think it costs like $800 a year just to have the LLC, whether you use it or not. Yeah. So different states, obviously you have to check with your state, figure out what the requirements are, and that sort of thing there. We talked a little bit about taxes. LLCs primarily are just about limiting liability. That's why it's LLC, limited liability company. It's less about taxes because your LLC is a pass-through entity. Everything comes through that LLC is still going to go on that Schedule C page of your personal
Correct.
income form. So the things that you can deduct, it's that same list. You have it's the same exact form. So you've got the same fields with the same topics of types of expenses and that kind of stuff there for an LLC as you do sole proprietor. And at the end of the tax year, December 31st to January 1st, whatever profit the company has made passes through to you as personal income. So if you've got a bunch of money in your business bank account as you come up to the end of the year, you just got to know that if the business hasn't invested that into other, business things or expenses and those types
Marketing,
of things,
equipment,
that's going to come to you as income that's going to go on your personal taxes at that point. So being a pass-through entity is something that you got to keep in mind. It's not necessarily a bad thing. It's just something you need to be aware of as you're doing this, because that money, it's yours. That's basically what that comes down to. Is at the end of the year, if you haven't already spent it, well, that's yours, whether it's in the business account or your personal account. Now, S corp. S corp is you're electing to be taxed as an S corp or status. So you can start as an LLC and make an election at some point to be taxed as an S corp. And then you can do that at the very beginning of the tax year. Makes things a little cleaner. I did mine in the middle of the year last year. My lawyer helped me with this. But basically, the first part of the year was on my Schedule C stuff on my personal taxes, just as the LLC. The second part of the year was then as an S corp. The difference with being taxed as an S corp is with an S corp, the company actually has its own tax return, and now you have your personal tax return, and the company is going to give you a tax form at the end of the year instead of a 1099 or W-2. Off the top of my head, I want to say it's a K-1, but that may be wrong.
it could be a W-2. It could be a 1099, but you will also get a K-1, because if you have any holdings that, like if you take an owner's draw, I see some questions here. How do you pay yourself? There's owner's draws, owner dividends. There's all these things.
Yep.
So we will cover those in the future for sure. But in this case, the S corp, you will have a K-1, which is a dividend outcome, which is, hey, you have to pay yourself what the IRS considers a livable wage when you go S corp. So when you do go S corp, ensure that you are making, the number. Again, I don't need to know what you make, but the number that I heard the best way to go S corp, I've actually heard two numbers. One is when you're over 130K a year, because then you can limit the liability. You can make, again, now you have two deductions, and if you pay yourself 50 grand a year and then still do some owner draws, you can still be profitable, even though you need that 72. You can do 50 grand as a W-2 employee, and then the rest as a dividend or K-1, which has its own benefits and write-offs. But the number that I heard was over 150 grand. But the number that heard to me that I stuck out is really when you're really, again, this depends on how big you're really planning on getting, and if the corporation has multiple employees. But the other number was more than 250K a year. So it's always like, well, what number makes sense? Because keep in mind now that S corp has to pay corp taxes, which right now is 22%
the S corp,
of all income.
S corp as an LLC is still pass through. It's
still pass through.
It's the C corp that you've got corporate taxes. S corp is this magical place where it's still a pass through, and you get S corp's actually pretty amazing because it gives you a lot of flexibility. A lot of different ways you can pay yourself with different tax burdens and that kind of stuff. I had always thought that same thing, that there was like a number that once you cross this number.
Really? So S corp just
Yeah, it's still pass through. And when you make the decision to go LLC to S corp, there's a lot more to it than just a threshold number, because that's what I had always thought as well. Like I thought that there was a threshold number where once you make more than a certain amount, it's worth the extra overhead just pay to do payroll, to pay yourself as a W-2 employee and pay the payroll company processing fees and that kind of stuff on top of that. But it isn't quite actually that simple. There's a lot of it that goes into uh, estate planning, retirement planning, investment strategy, those types of things, your company's growth strategy as well. With an S corp, you have shareholders, and one of the things that my lawyer advised me as we were doing our wills and that kind of stuff this year too was that my wife was married to me, not my company, not my EIN. She's married to me. If something happens to me and she's not a shareholder in that company, she can't do anything. She can't go to the bank. She can't process payments to vendors. She can't process payments to subcontractors. She can't do anything to shut the business down. She can't do anything to operate the business if she's not a shareholder. There is also, from an investment standpoint, you'll have to decide for yourself what role you want Social Security to play in your retirement. Because when you're an LLC and you're paying that quote unquote self-employment tax, you're paying both halves of that tax. You're still paying into Social Security with everything you're making. And so the number you were hearing, I think the 130 number, I think the key with that one is that number is high enough that you can max out your Social Security contributions still to get the full credits.
Yes, 130 is still the number. Right. Yep.
But then also from a retirement planning perspective, if you want Social Security to play a larger role in your retirement, you're going to need to pay yourself a larger W-2 salary so that you're continuing to pay into Social Security. If you reduce your salary, and this is the trick, like the wording with the IRS says you have to pay yourself a reasonable salary. And most people, when they see that, it's like, oh, reasonable. Okay, well, that's market rate. It's a reasonable salary for me doing this kind of work. That's not entirely all of it. As I was talking with my lawyer, it comes down to what is reasonable to pay yourself within the context of your business and your business's structure as well. So, there's that piece of it. So it's not quite as straightforward there either. But if you are an S corp, and we'll talk about paying ourselves, we'll dig into this a little bit more later. You can pay yourself through owner draws, but the owner draws are only subject to regular income tax. It's not all of the Social Security stuff on top of it, the same way your W-2 income would be. You can pay yourself as an employee, W-2. And then the other part of retirement planning is, as an S corp, you are able to put away money into your, like a solo 401k investment. You can do the same thing with an LLC, but with the S corp, if your spouse is also a shareholder, so that they can handle things from a estate planning perspective, they also can have money put into a solo 401k for them. And the solo 401k limits are significantly higher than the 401k limits for an employee when you're working for somebody else. Like I want to say they're like around 20 grand for.
I thought it was 23,000 last I saw.
Okay, so they've raised them just a little bit.
A little bit.
23K for a solo 401k. The limit was what, 69,000 or something like that. I want to say, but you and your spouse both, if you're a shareholder, as long as your spouse has 2% of shares in your S corp, they are now also eligible for solo 401k, and you can put that same amount in theirs. And so all of a sudden you can put a lot of money into a 401k, which is great if you live cheap. If your living expenses are low and consulting is very low overhead, and in cyber we're paid pretty well, there's potential for a lot of cash to come in, and you may struggle to find enough expenses to lighten your tax burden on this stuff.
Yep. Yep.
S corps also give you more categories for expenses, as well as some custom categories that you can create and document what
Correct.
those
Yep.
custom categories are in your business. So you have more flexibility with deductions, but you may still have trouble finding enough deductions. So the ability to sock away for a married couple who are both shareholders in the S corp up to what's that end up being $130,000 a year or something.
Yeah. Yeah.
It's that I mean that you can stash a
Massive.
lot of
Massive.
money into retirement savings that you're not paying taxes on if it's a traditional solo 401k instead of a Roth. And then what you pay yourself with that reasonable salary and everything else, like it may still come down significantly. So it's just a matter of what you do there. And so the way I've set mine up is I basically set my W-2 salary equal to our normal household budget just day to day. And then I plan to do owner draws beyond that, for a certain amount just through the end of the year for lumpy stuff and other things. But then at the end of the year, as money has built up in the account, I can then talk with my tax attorney, my tax advisor, to say, okay, this much money is there. I either need to invest it, I need to pay it to myself as a bonus through the W-2, I need to pay it as an owner draw, or I need to invest it and dump it into my 401ks,
Yep.
or
Yep.
invest into the business and buy tools and equipment and that kind of stuff.
Marketing shared. Yeah. Yep.
Yeah. So there's a lot of stuff you can do there. And then there are C Corps. C Corps is generally what bigger businesses are. I'm not going to dive into that a whole lot. C Corps are going to have their own corporate tax.
Yeah.
And then you're also going to pay personal taxes on the money you make off of it. C corps tend to be what people do if businesses know that they're going to go public or things like that. They'll switch over to that. But for the purpose of what we're talking about here, and the folks that are listening here thinking small business, I don't think C corp's going to really be appropriate for.
It's good
for
to know that it
anybody.
exists, but I would love for you guys to get there. But at that
Yep.
point, you've got lawyers, you've got a team. You can focus on those when you get there.
So what did we forget? Did we forget anything on those?
I don't think so. LLC. So I do remember now the S corp is that magical in between, and it was it's funny because the real estate business is an S corp, so we can have people invest in and get shares throughout our pay period. So but I always tax it too. Like again, I'm so hands off on those things that when things like that really start to add up, I try to like, hey, I pay people to know this stuff better than I do.
Yep.
And at times, again, we have a whole section on that. What do you really need to get started and things like that. So I think from that perspective, again, staying in the LLC S corp area does what they say they're supposed to do, and I think that really addresses again. I saw so many questions. Limiting liability.
Start with an LLC though, because you can go from an LLC to an S corp, but you can't go back. If you start with an S corp and decide you want to switch back to an LLC, you have to bring up a new entity and spin it down, and it's a pain. It's not clean. I mean, it can be done, but that's not generally an option for the same entity. So if you start as an LLC and then move to the S corp once you've proved it out and you're starting to scale and you've talked with your tax advisor and your CPA and understand the benefits, and for you and your situation, when the right time to make that switch is, they can help with that, because unfortunately it's not as simple as the YouTubers that I used to watch would have you believe it is for deciding whether LLC or S corp is the right option. Man, yeah, we're close to time. As we're wrapping up, I just want to reiterate that you can start without doing all of this stuff. Focus on the right stuff. Prioritize generating revenue. Prioritize, testing the waters over quote unquote making a business. Don't focus on being all the branded swag and the website and the email and all this stuff and the business cards and all making the appearance of a business. Focus on doing it and making some money. Those other things become important as potentially as part of your marketing strategy. And we'll talk about marketing in another session as well. But like when you're first getting started, just test it out
Yeah.
and
Yeah.
focus on generating revenue. Don't focus on creating the whole image of a business and all that kind of stuff. You don't even have to go the LLC necessarily, but when you're doing consulting, having that liability there, because if you advise somebody the wrong thing and they do it and they're upset because it didn't work out for them, like you could potentially have issues there. So if you're going into
Yeah.
consulting, you kind of need it. If you're making stuff to sell on Etsy, probably not. So
Right.
it just kind of, again, depends on the risk surface of your business and the type of risk that you're worried about happening to your business and what's likely to happen.
I will admit, on my very first business, I got hung up on like, oh, I got to pay $1,200 for a logo and marketing package and this and that, and then I got to do this. And while I guess it worked, again, the first business I started was called Next Frontier Technology. It only exists on paper at this point. I own the domain still. I own all the stuff associated with it. The EIN is spun down. I paid all this money to spin it up, and then a few years later, I was like, I am not a CEO. This is terrible. Why am I doing this? And I spun it down, and I'm like, no, I should have left it alive, sitting in the background. It just cost me a few bucks to shelf it, but I learned. But again, but now I know when I spin up the business, I make my business first, and then like my real estate business, you know, I just built the real estate stuff. I went and bought condos. I went and did this. I went and did that, and then suddenly I was like, this probably needs to be a separate business entity. And then now I'm going through the process of moving it, which does cost a little bit of time, which definitely costs some money, but effectively I proved that it worked to myself first.
Yep.
Am I literal Joe? Am I the average Joe here, or am I the smart guy? Can I do this? Am I capable of this? And went that way. I bring that up because now, if something happens to my real estate business, it's not going to affect my cyber business. My cyber business isn't going to affect my real estate business. My livelihood, me in between all these arrows pointing at me, it's a very delicately stacked house of cards, and things are working out. So I have I make enough money through the W-2. I make enough money through the 1099. I make enough money through the Schedule C on the S Corp. I make enough money through the Schedule C of the cyber business. I make enough money through the Schedule C of the other real estate business. Like it can be tough, but again, my entire goal is to make sure that if something happens when somebody's renting one of my condos, I have protections from my day job, my house, my other things. And it gets really creative and constructive remembering to do certain things at certain times. Hence why, you got to make sure that you stay very hands-on and effective in your businesses. But the first thing that I will say is we did chat about this, maybe not focus on those, but certainly when you do start to stand up the LLC, one thing that drives me crazy sometimes is for branding and marketing is go get the domain. It doesn't have to be in the business's name or on the business credit card initially. You can sell it to your business one day if you want, or you could just assume it as an asset. No paperwork, nothing complex needed, but making sure you're starting things off right with good, proper ideology. Even if it's Joe Brinkley Consulting or Next Gen Red Team. What the difference is, one is an EIN and one was just me trying to do a thing.
And we covered a lot. Hopefully people's brains aren't melting trying to process all of this. This is why we broke it down, because we realized if this is what we covered in 1 hour, we still have like 4 more sessions.
4 more sessions. Stuff. Well, I will tell you, some folks in the chat are very happy that we did this. We're getting lots of thumbs up and comments.
Yeah, so I'm looking forward to doing the next one and diving into, setting up the LLC and sort of what you do after that. And we talked a little bit about it here, but we'll go more in depth on the next one in that stuff.
Final thoughts.
The final thoughts is, for me, I think, is just it seems like a lot. It seems really scary, but if it's just one step at a time. And once you having taken that leap, and as scary as it was in that moment, looking back now, I can't imagine not doing it. And honestly, it's a whole lot less scary for me now. I've realized that it was back then, because each client is a different income stream for me instead of just a
Yeah.
single employer. And so I don't, even if I lose a client, if the economy starts getting rough, maybe I lose a couple of them, I'm not going to lose all of them. So it's not like I'm worried about getting laid off unexpectedly and just all of a sudden not having anything. And so from a risk standpoint, it's actually, I feel like it's less risky for me. It's less scary because I have these multiple clients, multiple income streams now, that as opposed to having all my eggs in that one W-2 basket with a single employer.
Absolutely. That's the benefit of the side work is now I have augmented my income. I've augmented my retirement. I can put more money away. I can buy more condos. I can change my life. I can change my life, and being able to learning how to found the company, start a company, get the funding. All of this on episode 1 so far has been literally the things that, if this was around 12 years ago, I might have started keeping some of my, or it's 14 years ago, I would have kept my other company around and worked through some of it and really reformed it and done some shaping and ensured that I'm doing the thing that I'm good at. Because at first I just took anything that was IT related, and I'm not good at everything IT related. And I think that was my weakness. And now my strength is Next Gen Red Team, my company there. I do the one thing that I'm really good at. I can get pen testers and I can do those things, and that's the way I've built it. And it's part of, I do my community with it, my mentor, my outreach, all of it goes to that, and it makes me happy. I have my freedom. It makes me happy. I rejoice in that. So that's my too long don't read, my TLDR.
Man, this has been fun. I'm looking forward to the next one. We'll get that scheduled and put it out on the Twitters or the X's.
The X's,
whatever you call it.
The Twixes or Zwitters.
And we'll get it out to folks so they can, listen into the next live stream as we stumble all over ourselves. I will have a lightly edited version of this conversation that will actually go out on the Mindful Business Security Show, my podcast. And so these episodes will go out as special episodes in the podcast feed, now and through the summer as we do these. And so you'll be able to get them there as well.
So check it out, guys. CISO, Accidental CISO there on Twitter. Joe Brinkley, Blind Hacker here on Twitter, X, all the other social medias. Appreciate you hanging out.
Yeah, appreciate hanging out with you as well. And all of our listeners, want to thank you for hanging out with us. I hope that this conversation was useful as you're maybe thinking about the possibility of starting your own business. I look forward to covering the next topics in the next several episodes, and hope you'll be back to listen to more. I'm Accidental CISO, and until next time, stay mindful.
Don't miss our next episode. Be sure to subscribe in your favorite podcast app and follow us on social media. Visit Focivity.com/podcast. That's FOCIVITY.com/podcast for show information and links to our social media pages. This has been the Mindful Business Security Show, brought to you by Focivity.